It's the midweek edition of Business Morning live on Channels Television. Good morning, good evening, wherever the world you're watching from. I'm Ladi Williams, and let's take a look at what's in the news. Starting with oil markets. Oil prices rose at the start of Asian trade today after industry data shows drawdowns in U.S. crude and fuel stockpiles, raising supply concerns and offsetting worries about slowing demand from top importer China. Brent crude futures rose 89 cents to $105.86 a barrel. U.S. West Texas Intermediate crude rose 97 cents to $103.38, about a 1% rise. The gains come from on the back of news from Tuesday that the European Union is working on new sanctions against Russia for waging war in Ukraine that will target Moscow's oil industry. In the United States, crude and fuel stocks fell last week, citing American Petroleum Institute figures. So crude stocks fell by 3.5 million barrels for the week ended April 29, more than an expected 800,000 barrel drop in a Reuters poll. And back at Nigeria's stock market is expected to start off the month still in positive territory after ending April with a 5.7% gain. That's the highest monthly gain so far for 2022. It comes as the country's financial markets resume from a two-day break for May Day and Muslim Eid festivals. For the holiday, the market ended the final week of April stronger in the green with 2.43% gain after sustaining a hangover of positive sentiment in the previous weeks. Meanwhile, the market's benchmark performance indicators are cruising to the 49,000 level, while year-to-date return currently stands at 16.2%. We'll get more of that from Anita later on in the show. Well, the World Bank plans to adjust the global poverty line from $1.90 to $2.15 using 2017 prices, and it's due to the increase in the cost of basic food, clothing, and shelter across the world. According to the latest publication posted on its website, the World Bank explains that the planned revised rate, which is set at prices of these provisions in 2017, implies that anyone living on less than $2.15 a day is considered to be living in extreme poverty. International Finance Institution adds that around 700 million people globally were in this situation about 5 years ago, with sub-Saharan Africa still rated as a region with the most extreme poverty. And since 1985, the World Bank has revised the international poverty line from $1 a day to $1.08 per purchasing power parities, $1.25 from 1993 to 2005, and $1.90 since 2011 till date. And after the break, our first conversation, we'll look at the state of digitization with MSMEs in Nigeria and driving growth in that sector. That's our next conversation. Do stay with us. This is Business Morning. All right, now to our first conversation. Technological advancement and digitization is rapidly taking over the global economy, constantly shaping business operations, and businesses under the micro, small, and medium-scale are urged to incorporate it into their business activities to accelerate growth. Well, let's get a sense of the MSMEs right now and the level of digitization with the MSMEs in Nigeria. We have joining us Femi Iromini, CEO, co-founder, Money Africa, right here on Business Morning. Great to have you on the program.
Thank you very much, Ladi.
Yeah, we know MSMEs are the backbones of any economy, and they need to be shown a level of attention to make sure that the economy keeps growing. But I want you to paint a picture of the level of digitization right now with MSMEs in Nigeria.
Thank you very much. So I feel the first place to start is actually you drill it down to the numbers. So it's easier for you to now think around the impact. Like, think about it. If most businesses are digitized in Nigeria, what's it going to look like, right? You look at the number, you're looking at over 36 million SMEs in Nigeria alone, right? And about 80, that accounts for about 80% of businesses in Nigeria. That means they're doing a whole lot. They're employing over 80% of Nigerians, right? Now, the interesting thing is having this number, you still cannot see the impact when it comes to digitization yet, right? You're going to be shocked that just about 6% of this business actually has a website.
A website?
Yes, basically.
Wow.
And then maybe the next part might just be, okay, a lot of them, they have social media pages, Instagram, Facebook, and all that, right? But what beckons to that is the fact that when you're going to think about digitization for businesses, MSME, right? It's more like it's more like an ecosystem. None is disconnected. They have to be connected together. The first level is identification. Then you move on to the infrastructure that supports that, data, and then you just go on to so many things around the digital inclusion, right?
Yeah.
But you cannot just talk about the problem without the costs, right? And what comes to mind is the first is the digital literacy, or better still, the skill set that is required to be digitally included as a business.
So we have financial literacy,
digital
and
literacy.
we also have digital literacy.
Yes.
Okay, makes sense.
And essentially, when you think about digital literacy, it starts from, how do I even create a basic email as a business? Am I even sure that I need to have an email, official email as a business? The next phase is
because I know when I see businesses use generic email addresses, it kind of looks unprofessional.
And the other part is using personal email, right?
Right.
Now, the digital literacy is actually not there yet. Like, there's a way I have to position myself as a business so that I can have that perception. People can have that perception that I'm digital savvy, I'm digital ready, right? And then the other part is the barrier to entry, or the barrier to access for these businesses. Sometimes when they think about the cost of the internet, when they think about, okay, how do I get the support that I need, is another big challenge, right? And the other interesting one is cybersecurity, fraud, and the data privacy, right? Often, when you think about most of these businesses, you hear any small thing around, okay, they hack this person's website and all. They're very scared. They're worried, like, am I safe online?
And there's a cost to actually protecting yourself. And I also saw, a recent report showed that over 44% of companies in Nigeria actually paid, a ransom, when they, most of them, got hacked. And that's a huge cost.
It's a lot. It's a lot. And so first, even when you think that you're digitally literate, right? You're worried about your data privacy. So before you now think about a business that is just trying to embrace technology, in the first place, they will not want to do it, right? So I would say the good news is this: pandemic has actually pushed us a bit further, right? When it comes to accelerating adoption of technology, pandemic was very helpful because you just have to order things online. You can't open your shop and all that.
Right.
And that's actually brought some businesses to be digitally included, basically.
Quite interesting. Yeah. And, talking about these businesses, now we see most of them, they start a business, small business. Next thing, they open an Instagram page or, Twitter, and they start to market, their products. And there's a huge number of merchants, on these social media platforms. Does that paint a picture of digitization?
To a very large extent. You being able to, first is access, right? Visibility. If you're able to open your Instagram page, even your WhatsApp, you're selling through your WhatsApp. You can sell through your WhatsApp status, right? It's more like the first leg to saying, okay, I'm digitally included as a business. Some even say it with pride that I go and check my Instagram page now. It's there. You can order from there. It's a step forward, right? But there's a whole lot more that can actually be included if they actually get the right support. The interest is there, the willingness is there, but do we have the framework in place to actually support them to be digitally included, basically?
But talking about support now, what kind of support do these MSMEs actually need to be more, digitally literate?
Digital education, right? Uh, the part for government is there and other corporate trade association to us to support this, right? Is essentially around digital education, right? How do I set up email? Why do I need email? What is the benefit? Result is very important, right? If they can do like a comparative analysis, the other woman that is selling behind across the shop, she has the Instagram page, and to a very large extent, she's selling a lot because she has an Instagram page. It's going to be attractive to them, right? But getting these kinds of support requires a concerted effort from different stakeholders, government, corporate bodies. It can even be our CSR, what they call it, trade unions. They can support with that as well. And providing that kind of education, it makes it easier for them to embrace, right? The next phase is, what do they need to? What kind of tools do they need to? Can there be a discount or a subsidization model to assess some of this to basically for them to start? The moment they are included, next thing is they want to do more with whatever they've learned.
Right. And, talking about, these platforms where some of these merchants actually sell, I've noticed that, to promote your products, you have to pay, in dollars, with some of these platforms. And I'm looking at it like, okay, this is actually importation. We're sending, dollars out of the country. Is there a long-term solution to this? Making sure that, maybe we have a platform, that serves Nigerians, and actually you can pay in Naira. You don't have to start, you don't have to send out dollars, to pay for promotions on these websites, because to me, that's importation. What do you think?
So I'm a big fan of local promotion as well, right? Social media network is actually complex, right? You could have just woke up one day and say, I want to build a social network for Nigeria.
Right.
But that's almost like a myth, it's a joke, right? Because the reality is the muscle, the capacity it requires to actually build a social network is different, right? It's a whole lot more, right? But we should not just focus too much on social network. There are other platforms that are actually enabling commerce, that are enabling businesses online. That's you don't have to pay dollars. You don't even have to pay for some of this platform for them to enable them. There are marketplaces, there are e-commerce platform, their storefront, a couple of them locally that they can leverage on.
Because sometimes you get more visibility when you actually pay for promotion.
You get more visibility, but you can actually walk around. You can actually work with what you have for a start, and also there are also programs, opportunities that actually provide access to subsidized credit, free credit. But in essence, in order not to encourage too much exportation, there are local platforms that actually place to that. They are placed to you being able to display your products.
And it actually get customers from abroad, at some point.
Basically.
But, there are many technology companies claiming to provide, all kinds of, solutions for MSMEs across Africa. Is there a risk that, store owners may be overwhelmed by all these options?
We're not there yet. Because at the being, we're at that point where we're saying a lot of businesses are digitally included, right? Yeah, we can say, okay, they will be overwhelmed, right? But think about it. Ask an average business on the roadside, and then do you have an Instagram page?
Right.
Do you have an e-commerce? Are you selling on this platform? We're still not there. So the fact that the inclusion is not there yet.
Do we get there when we see maybe the average bolly seller, on the road, able to receive payment with some app?
So we're getting there already.
Okay.
For instance, if you think about 6 years ago, you're just passing by the roadside and yes, okay, can I do a transfer? It's going to be strange. But now some of them, they actually provide, if you go to Balogo, for instance, you can make a transfer to them, right? That's payment part of being digitally included, right? We're going to get to that point. We're going to get to that point with the right mix of
So some technology. Of them don't even have bank accounts.
That's the first thing, financial inclusion. And it's a whole lot of, okay, before you even talk about digital inclusion, or then you talked about identity. Why is that some of them don't even have bank accounts?
Exactly.
They don't have identity for the business. They don't have documentation and all that. So many disconnected, but to a very large extent, when you think about internet penetration, we're getting there. Over 100 million people are actively using internet in Nigeria already. And the growth is there. Pandemic encouraged it. And then we're seeing a lot of efforts from different stakeholders as well.
All right. And I've been hearing some chatter about community financing models. Can you tell us more about this?
So when you think about the issue of microfinancing, right, it's interesting that it's around people coming together to make contribution, to have access to loan, right? And when you think about financial inclusion as well, it actually starts from, I'm able to have an identity, I'm able to open an account. Next is I can save. After saving, I can have access to loan, and also have a credit history, right? But you think about a perfect picture in most developed country where you have a working credit bureau, right? You can access your credit reports. There's a recourse around the fact that if I default, I know that it's going to affect my credit rating. It's going to affect access to so many infrastructures, right? But you bring it back to Africa, most emerging markets. Often it's always around, I can get away with anything when I take loan.
When you take that loan?
Yeah.
Right.
The mindset is there. Because to a very large extent, you can rely on credit bureau to provide access to credit. And often the data there is not real time, right? And the thought is, you cannot just import a product or a technology to this part of the world without you thinking around, is there an infrastructure support for this? Infrastructure support for credits is still very low. The fact that the recourse is not there. And what microfinancing has actually has been able to do is the fact that you're able to bring people together, they come together to be able to access credit, right? And to a very large extent, that's our thinking around it. So like, okay, instead of just leveraging on statement of account, credit bureau that is not totally reliable, can we actually focus on what works? And the model is very simple. Ladi stays along the streets, not too far from me.
Right.
He has a social intelligence about Femi that Femi is a good guy.
Right.
He can actually do underwriting about Femi. If they form a community of 5 to 25 people, if Femi is defaulting, Ladi can go to Femi's house and drag him. And then the other interesting thing about most emerging markets is, often, no matter how much you publish their name online, they might not really care, but they care so much about their identity within their community. One of the most common social habits.
That's why the shaming actually worked.
Shaming is not great. Really.
It's actually a horrible way to you get the money back.
You can think about it as social pressure, right? For instance, there's a thing around community in most emerging markets. Ajo, Esusu, people form groups. Even when you are getting married, there's a way they create ashwebi. Right. So the sense of community is there, right? And that sense of community, it's birthed something around, I don't want to be left out, right? Often, some people will say, Mayomi Legbe in Yoruba, like, I don't want to be left out. Right. That sense is there, right? So to a very large extent, if that social habit is there, why can't you leverage on that social habit to be able to provide financing to people? Right.
Well, probably so much to actually unpack there, but we've seen a huge change from the last 10 years. Talking about financial inclusion and digitalization. All right, Femi, thank you so much for coming on the program. Femi Romini is a co-founder Money Africa. The next 10 years will be interesting to see. Thank you so much. Well, we'll take a moment now. Business Money returns in a moment. All right, time to see how your money is performing on the AFEX Commodities Exchange. It's mostly red, the commodity market summary for the week ended May 2nd, 2022. Most of the parameters closed in red except for the number of deals. That was up about 12.72%. And the AFEX export index also in the green. Well, we have Femi Kehinde, structuring and origination analyst at AFEX, with the details. Great to have you, Femi. Good morning.
Good morning, Ladi. Great to be here.
Yeah, so Femi, give us a rundown on the market activities on the exchange for the week ended.
Okay, so as you rightly said, there was a reduction in the level of liquidity on the exchange as the value traded declined by about 90% week on week, while the volume traded declined about 55% week on week. However, the number of deals surged by about 47% week on week as more deals were executed this week as compared to the previously reported week. For the indexes on the exchange, we actually saw a decline in the AFEX commodity index by about 1.58% and a marginal uptick in the AFEX export index by about 0.68% week on week. In terms of the contracts traded across commodities for the reporting week, soybean accounted for a majority of the contract as 2.4 million contracts were executed this week. However, this was followed by sorghum, cocoa, paddy rice, cashew, and also maize for the reporting week. In terms of commodities prices, there was a general uptick in the prices of commodities traded on the exchange. Maize closed the week at 250 naira per contract, representing a 6.8% increase week on week. Soybean closed the week at 430 naira per contract, representing a marginal increase of 0.7% change week on week. So sorghum closed the week at 255 naira per contract, representing a 8.5% change week on week. Paddy rice closed the week at 252 naira per contract, representing a 8.9% increase week on week, and cocoa closed the week at 1,249 naira per contract, representing a 5.7% increase week on week. Other prices remain the same for the reporting week. For more information about our report spanning the commodities market, the domestic and international commodities market, you could go to our website at www.africanexchange.com, or you could follow us on our social media at afexnigeria.com or Comex by AFEX. Right.
Thanks for that, Femi. As long as my portfolio, is doing well, with the commodities. But now let's take the conversation further. For, many smallholder farmers, one of the most challenging barriers they confront is getting their products, to the market. And we see markets in developing countries frequently lack, integration, as we've seen, lack of communication and information sharing. So, Femi, I'd like to know, how are these exchanges like your exchange, how are they getting farmers, the right buyers, getting their products actually to the market at this point?
Yeah, so as you rightly said, as observable in Nigeria, farmers typically stay in locations not within the proximity of economic hotspots. So the usual practice over the years, due to this fragmented market, means that traders actually go into the villages, purchase these commodities at ridiculous prices, then come into the commodities market in the town or economic hotspots and actually sell to processors or other market players at ridiculously high prices. Because of this, we as an exchange, we've been able to leverage on technology to help bridge the gap or bridge the space between the farmers and the processors, or rather between the producers and the users of these commodities at the end of the day. So with the likes of technology like Workbench, which is a agri inventory model, of which will help farmers keep record of what they have in storage, what they have in storage, what they've been able to sell, how they want to sell, and the likes. And then Workbench, which also helps keep proprietary data in terms of, okay, this is how the weather has been over time, this is what we're looking at. And also Comex, which is the OMS, which matches buyers and sellers on the commodities exchange. We believe that we've been able to leverage on technology to help bridge the gap between the farmers and the producers, as farmers are able to place orders to say, oh, I want to sell a bag, or I want to sell 20 kgs of maize at this specific price, and then a processor who is looking for a significant volume could actually come into the market or come to the exchange, go through the Comex trading platform, and also place a sell or a buy order, a buy at the market rate.
Right, and another issue is price standardization. How do you think commodities exchange can, play a role in this, ensuring smallholder farmers get their value, for their produce?
Okay, so as a result of the fragmented nature of the commodities market in Nigeria, we've seen traders gaining crazy arbitrage as a result of buying low and selling significantly high. And because of this, a lot of the initiative by numerous stakeholders in the commodities market hasn't actually shown positive result or a significant positive result, because at the end of the day, farmers are not able to meet or sell their commodities at fair value. Since we're leveraging on technology, which enables effective or efficient price discovery, every market participant is able to know what the price of maize or any commodity is at a point in time. As a result of this, players like processors, farmers can then meet themselves and say, oh, okay, I know this is what the price is going at now, and this is what I am willing to sell. These farmers have enough and efficient information to make adequate orders on the system, to which they can now earn fair value for their commodities and plow back their additional or disposable income into producing more commodities for the next season.
Well, buying low, selling high, that's music to my ears, Femi. But, you know, with the solutions of storage facilities and funds to mop up crops from, you know, commodity exchange like AFEX, is Nigeria likely to close, you know, the food production gap anytime soon?
Yes, closing the food production gap is a possibility. However, there are a lot of more things that needs to be done. Currently, we've seen that the production of staples in Nigeria are not enough to meet the demand for the same staples. And if you look at what volumes that commodities exchange like AFEX is doing, you see that, and in comparison to the crop production GDP of Nigeria, you see that there's still a lot of room for growth. There's still a lot of market share that needs to be mopped up at the end of the day. The way forward would be every stakeholder needs to join their hands together, think of initiatives that can actually help the market grow in a sustainable manner. And at the end of the day, we actually can envisage that, yes, we can produce enough that the exact amount we need to consume. And also, we can also become a net exporter at the end of the day.
Right. And, you know, taking this to a national level, now, how important is it to develop a commodity exchange, you know, in helping the country's entire food security issue?
Yes, so think about it this way, right? There's a need for data to make efficient policy. There's a need for funds to flow into the primary sector so that the primary sector can be robust enough to accommodate the secondary sectors like the manufacturing sector and the service sector. Now, the key role the exchange plays in this is the exchange houses or is privileged to have a lot of this data to help policymakers make better informed decisions or implement better policies that better help the primary sector grow in a sustainable manner. The other part will also be products, right? Because players in the sectors are usually crippled by numerous problems. You look at processors not having the adequate capital at the adequate low-cost capital in order to procure at the relevant time that is needed. You look at farmers not having access to fair markets for them to sell their commodities at fair value prices. Now, the exchange is seated in that position where the exchange provides a platform for people to meet themselves and sell at the end of the day, which essentially is a market. And also the exchange provides product like risk hedging products, capital provision products to actually help diverse players in the sector grow organically.
Right, and you know, Femi, we've seen how commodity prices have soared, you know, with geopolitical tension, you know, globally right now. And do you think this is the time, you know, for, you know, traders that are looking to enter into the commodity space? Do you think this is a good time, you know, so they don't end up buying the top, or do you still see commodity prices actually, you know, rising further this year?
Yeah, so I believe commodities prices are still up for a little bit of room to increase upwards as a result of this is mostly as a result of the scarcity that we're beginning to experience in the commodities market. Now, if you go to the open market, you see a lot of traders not having staples for producers or for processors to actually buy. If this is going to continue up until the next producing cycle, which is October, November, December, we know that following the normal rule of demand and supply is low, demand is high, scarcity, which will result to upward pressure in prices. So there's still a lot of room for price appreciation for staples in the country.
Quite interesting. Well, Femi, thank you for looking into your ball there. Maybe I might still look into getting into that commodities market. Thank you so much, Femi. Always great to talk to you. Femi Kehinde, analyst, structuring origination at AFEX. Well, we'll take a moment now. All right, now for more markets, we have Anita standing by there to tell us what the expectations are for the local boss in Nigeria here. Anita, great to have you. Well, I see the outlook is quite positive.
Yes, Laddie, good morning. The outlook, yes, for the market, let me just remind you that the month of April has been the best so far within the, this is the 5th month, but within the last 4 months, the month of April turned out to be one of the best for the market. 5.74% is what it turned out. So we're still reviewing. Today is the official start of the first trading, for the markets. Today is the first official day in the month of May. So, and of course, I've been reviewing other markets, the fixed income market, the equities market, as well as the money market. But this time we're looking at first of all, the smaller unlisted securities market. Now, this is how it turned out at the close of last week's trading on Thursday. So this is how it ended. The market was down by 9.63%, and that comes on a negative movement on the NASD's index. Of course, we had some profit taking, so the market's capitalization had dropped all the way from 1.01 trillion naira to, this is it, 9.11 billion naira. So over to the volume of activities there, it recorded an increase, 19.80% increase in total volume of transaction, in contrast to what it had the previous week. 59.29 million units was traded last week. And then, of course, in terms of the volume was up by 3.12%, and then the value was also up by 19.80%. So that's for the market. Now, when you take a look at the advances for that market, food concepts, which, mind you, some of these securities here, some are listed on the NGX, and then at some point, the ones listed on the NGX, which have been delisted, are listed here. So that market goes in line with what you call the securities market. So in terms of the advances, food concepts was top among 5 securities, the advances in terms of value. Then in terms of volume, for the decliners, 1111 PLC, which was previously listed on the NGX, it was the top loser here. It was down by 3.85%. That's for the NASD market. So that market is just not, it's not all that vibrant, but we will be having analysts from that market to analyze more about that market, give us more knowledge about security trading in that market. Now over to the Nigerian equities market, it was up by 2.43%. Mind you, I had already given you how the market's performance earlier in the week, and for the sectoral performance, as well as the total volume, value and deals. So now to give us more, give us an outlook on what to expect for the market and the start of midweek and May trading, let's talk to Richard Akimoladu, equities trader at CSL Stockbrokers. Thank you for joining us, Richard.
Thank you for having me on your program this morning, Anita.
Yeah, I'm sure you had quite a very nice holiday, especially when you take into cognizance that you traders, you're happy that the market is in the green. So, but now with that being said, what are your expectations in the new month, starting as we speak?
Okay, before I answer that, let me speak briefly to the month of April. As you rightly mentioned, it was a very impressive performance for the market in the month of April. We saw the market up month on month by 5.7%. Year to date now we are at 16% level. Osha Index above 49,000 mark now. If you look at the month of April, out of the 19 trading days, we witnessed 14 gains out of the 19 trading days. So it was a very good performance for the market in the month of April in all whatever indicator you want to use to measure it. And some of the reasons for this impressive performance were on the back of impressive Q1 results that were released to the market in the course of the month, and also the fact that we saw a lot of dividend reinvestment. To answer your question now, going to this month, it's going to be a mixed performance. We're going to see some profit taking in the market, but however, I see the market continue on this positive trajectory because of this impressive number that has been released into the market so far.
Okay, now with that being said, do you expect investors to continue to rotate their portfolio towards cyclical stocks, that have delivered decent earnings? Don't forget that last week we had quite a flurry of earnings. If I got it right, we had up to about 20 companies release impressive earnings. So what do you think investor sentiment would be?
So that is expected of investors. As you know that. As at this moment, the market is dominated by local players. So, and result is one of the key things that determines your position in a particular stock. So investor is going to look at this Q1 as they've come in, and you try to reassess them and try to actually rebalance your portfolio, move towards the one that has a very strong numbers in Q1. So that you can rebalance your portfolio to be in the right position.
Okay, so now if you take a look at the board here, top trades for last week within the entire 4 trading sessions last week was Honeywell, FCMB, and Transcorp. Honeywell in particular, and that's because it had received regulatory approvals from the NGX, that's the Nigerian Exchange Group, the Nigerian Exchange Limited, the Securities and Exchange Limited, and the Consumer Protection Agency. So now, at the moment as we speak, how is the shares of Honeywell and Flour Mills, how is it performing? Is it in the negative or is it positive, taking from how it closed on Friday? Okay, I think we have a bit of technical issues there.
Yeah,
it looks like. Okay. All right, Richard, can you hear me?
Yes, I can hear you now. Sorry.
Okay, yeah. I was asking.
So I said.
Okay. Yeah, go ahead.
These 3 stocks listed, we saw some significant crosses on those names. Honeywell, as you mentioned, there's an approval that was given last week. So there was a
Okay.
Connection is a little muffled there, but I did get what he was talking about there, and well, it's a positive outlook. We'll see how it all plays out. I'll be looking out for today's close in the equities market. I'm sure your crystal ball has told you what's going to happen in it, but you'll tell me that later. All right, well, after the break, we head to London. That's in a moment. Do stay with us. This is Business Morning. Welcome back. Still watching Business Morning. Let's head on to UK. We have Juliana standing by right there. Great to have you, Juliana. Good morning. Well, Elon Musk back in the news again, and his outlined plans to charge some Twitter users as part of his plan to grow revenue after the $44 billion takeover is completed. Seems he's ready to make some money after the deal is completed.
Yes, good morning, Laddie. No surprises that the world's richest man wants to earn money. I suppose that's why he's got the title. And it's pretty interesting because I think a lot of people don't realise that Twitter doesn't make any money. It has been floating on the New York Stock Exchange for about 9 years. And in all of those years, I believe it's only twice, in about 2018, 2019, where they returned a profit. They're not like the other large social media platforms like the metaverse. Facebook, for example, example, worth £500 billion, Elon Musk managed to buy Twitter for $44 billion. That deal hasn't yet been completed. I believe he's still trying to source financing, which is why this idea has come up. I believe he wants to pique the interest of potential banks that will help him fund this historic takeover. And one of the ways he wants to monetize it is to potentially charge some accounts. And this is not everybody, because I know there's been a Twitter storm following the Wall Street Journal announcement. But I believe he is considering charging government accounts, commercial business accounts, politicians who obviously are using Twitter and are benefiting from it. But it's not just the monetization. I believe he is really keen on stamping down on bots. I'm sure we've all seen bots if you've been on Twitter, but there are farm bots. There are much more dangerous bots rather than the ones that just ask you to click on anonymous sites. There are some factories that are really shaping the way people see their news. So he's cracking down on that. And there's also an announcement about Twitter Circles, which is going to be a new a system, if you like, of users being able to tweet to about 150 people rather than tweet to, I don't know, how many followers do you have, Laddie? Over 2 million or something like that. You'll be able to do it to a really, really niche group. So interesting announcement. The takeover hasn't been done yet, so this won't be happening for at least until the end of the year. But Twitter share price fell 0.63% following the announcement.
Right, we'll keep watching to see how the takeover actually ends and how, you know, Elon Musk's reign will be after the completion of this takeover. Well, thanks so much, Juliana. We'll get more updates later at 1:30 on Business Incorporated. Thank you so much.
Thank you.
All right, now let's take a look at the other markets. Now we see the price of Bitcoin starting to have a bit of a relief rally this morning right at this time. But earlier, it was trading at $38,380. Market cap, 1.73 trillion. That was down about 0.87%. We see volume traded Bitcoin and the altcoins, they're up down about 14.33%. And Bitcoin dominance sits at 42.22%. Price of Bitcoin at 8 a.m., $38,380. That's with a volume of 27.86 billion. We see Ethereum trading at $2,814. That was down 0.93%. But we're seeing at this hour some of these coins actually going up. All right, let's bring in Gilbert Jopatan, our digital market analyst. Hello, Gilbert. Good morning. Great to have you.
Yeah, good morning, Mr. Laddie.
Yeah, great to see you on the show this time. Well, Gilbert, we're seeing a relief rally this morning, maybe because we have the FOMC meeting coming. That's the Fed meeting. But, you know, we're used to, you know, this market giving a lot of gains, 10x, 100x. But we're not seeing that anymore, Gilbert. Why is that?
Bitcoin is just an incidental victim of global macroeconomic trends. You could see the dollar is gaining strength. You could see the Feds are tightening policy. You can also see the Ukraine-Russia war. You could see NASDAQ. NASDAQ has dropped from its all-time high it hit in October, November last year. And NASDAQ presently sits in a head and shoulder pattern. And S&P, which is also NASDAQ and the S&P are the traditional technology stock market. The S&P also is in a head and shoulder. This means that we can technically say that the traditional tech market is in a bear market. In the other way around, we will also see inflation is rising. Although inflation rising is supposed to be mooning Bitcoin, but the entire pressure from the global economic environment is really melting down and putting pressure on Bitcoin. Bitcoin presently and the cryptocurrency market looks quite correlated to the tech stock market right now. And in periods like this, risks on assets don't really do very well. It is always a quiet market.
So it's safe to say if we see a bear market, you know, say with the commodities, the NASDAQ, you know, exchange, we can use that as a pointer for where Bitcoin is going.
Well, at the moment, the fact that Bitcoin still seems correlated to the stock market we could still use that as an indicator, but this wouldn't be for a long time. I expect a decoupling, and this decoupling is going to happen in a couple of ways. First of all, either the market decouples and Bitcoin moves, or once the tech stock bounces, Bitcoin is also going to bounce. And we also need to take a good look at the Fed. We are expecting a statement from them in the next 2 to 3 days. So let's look at on Friday, we should expect a statement from them. And I expect volatility from that statement, either to the upside or the downside.
Right. It's all about battling inflation at this point. And, you know, with the argument that, you know, Bitcoin is supposed to be a good hedge, you know, against inflation, you would expect, you know, the price of Bitcoin would actually rally, you know, at this time with rising inflation globally, but we're not seeing that yet. But it remains to be seen, Gilbert. But thank you so much for coming on the program. Always great to have you.
Right. My pleasure, Mr. Ladi.
All right. All right, so let us look at the top alts by market cap. It's mostly red on that counter. We've seen BNB trading down about 0.23%, Cardano down 0.79%, and eCash there down about 1.06%, same as XRP. So it's mostly red in the market this morning, but we see a couple of gainers there, curved out there about 9.33%, and Tron, I'm not seeing Tron on the top gainers list for a while, but it's up there, up 6.39%, and ZRX trying to make that move again. It started a few weeks ago. Let's see if that actually happens when it gets back above $100 per coin, and we see the top loser there, Algo, topping that counter down 8.01%. All right, that's it for the markets this morning. And that's a wrap on the program. Thank you so much for watching. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye-bye.